Good afternoon, everyone. Welcome to So You Want to Start a Business. We'll be starting the webinar in approximately 2 minutes. Again, welcome to our webinar. So you want to start a business? We'll be starting the webinar in approximately 1 minute. Thank you. Welcome, everyone. So you want to start a business? This afternoon's program is sponsored by the Hudson Valley School chapters in Dutchess, Putnam, Rockland, Orange, Ulster, and Westchester. And we'll also be enjoying what the greater New York chapters of Long Island, Queens, and Staten Island. Today's presentation is presented by John Amodio. He's the chairman of SCORE Staten Island. He's a certified mentor, business consultant, coach, trainer, and providing professional guidance and information to small businesses. He has almost 60 years of experience in financial services, banking, management, and marketing. He has had his own management consulting firm, assisting chief executive officers and other top management personnel in various industries in the development and implementation of strategic plans. He has been the president and CEO of a community-oriented commercial bank and the president of a corporation that operated well-known restaurants. John started his career with one of the big four public accounting firms and is a CPA. For those who aren't familiar with SCORE, our goal is to foster vibrant small businesses through free mentoring and education. We serve our small business communities by providing confidential business mentoring, webinars and workshops, extensive online educational resources, and we support startups to establish businesses. Volunteer business mentors with wide range of industry experiences and areas of expertise to draw upon over 10,000 mentors on a national basis. Next page will provide you with the phone numbers. Next page, please. Here's a list of the chapters and contact points of information. Again, please reach out to your local chapter for mentoring services or any follow-up discussions from this webinar. Next chart. Just a little bit about this webinar. Everyone will be muted during the presentation. As we go, you can submit text questions and comments using the Q&A button, not chat. Chat has been disabled. We look forward to answering as many questions as possible at the end of the presentation. And the question that always asked, yes, you'll get a copy of the slides as well as the recording of this presentation. Without any further ado, I'm going to turn it over to John.
Thank you very much, Bill. Today, we're going to go over some simple steps for starting your business. We're going to cover a number of things. First of all, you've heard a little about SCORE, but I just want to recap it for you again. We're successful and experienced executives acting as volunteers. We do seminars and workshops. We provide free mentoring. Now, with the pandemic, we're not doing any one-on-one, but we do the email mentoring, we do phone, and we do Zoom. What are we going to learn today? I hope we're all going to learn the myths and realities of entrepreneurship, critical success factors, knowing your options, components of business ownership, making it legal, funding and cash management, and business plan basics. This chapter, session 1, Startup Basics, is one of 5 sessions. The other 4 sessions include a little further depth of business concepts, more on marketing, on financial projections, and funding resources. It's too much time for all of us to sit down and go over it at once. It'd probably take half a day, if not more. So the additional 4 chapters are available in 2 ways. Number one, primarily by contacting a mentor at SCORE and asking them to send you a booklet that covers all of these sessions. And 2, which is even better, is arranging for a meeting with a mentor to help you go through these other sessions and help you so that at the end, you will know if you're going to go or no go with your business. I want to go over some myths that exist with and some realities that exist for entrepreneurship. First, all I need is a good idea to be a successful entrepreneur. Well, the good idea is great. You need that to start with, but you need to do some research to make sure that nobody else is using that idea. You need to put in a lot of work in getting this whole thing into play. So the idea is good, but it's not the only thing that you need to do. Secondly, if you go out on your own, you won't have to work so hard or such long hours. I don't know of any small business person that doesn't put in 24/7. There's a lot of work, there's a lot of time that you're putting in. You're wearing many different hats. We'll go over some hats that you're going to have to wear in a little while, but it is far from being on your own. Third, you'll be able to deduct everything, so you don't have to pay any taxes. Well, Uncle Sam doesn't agree with that. Your income is taxable, and you can deduct your business expenses from that income, and whatever remains after that, you're going to have to pay Uncle Sam. All right. If you work independently, you won't have to report to a boss. Well, you know, the adage is that the customer pays the bill. So you will have many bosses here to deal with. You'll have with the customers, you'll have with any investors you might have to deal with, you'll have with bankers that you need to deal with. You're going to have a lot of bosses that are going to try to push you left, right, and upside down. So it is being independent is not, if that's what you're asking and thinking you're going to be all by yourself, it's not going to happen. Business owners get to do the work they want to do and only what they find interesting. At the beginning, you're going to do everything. You're not going to like everything that you have to do. But as you go along, you will find that you're going to have other people working with you, that you will be able to delegate some work to, and hopefully what remains is the things that you like to do. And the last that I have is, if you choose to be self-employed, you'll be limited in what you can achieve since you'll be working alone. The only limitation you're going to have is what you have between your ears. You could grow, you could do whatever you'd like as long as you work at it and push hard for it. So don't think that you're limited because you're a small business. You could grow. Every big business started out as a small business. One of the things that you need to be aware of is statistics show that after 2 years, small businesses, 24% of the small businesses fail. After 3 years, 38% have failed. And after 5 years, 50% of the businesses fail. But that also means that 50% have succeeded. Now, what do you have? What are the critical success factors that you need to have? In this presentation, you're going to get a copy of the slides, so you can contemplate and think about them more as you go along. But I'm going to go through them so that I make sure we cover all we have to cover within the hour. First, one of the success factors that you need is a good choice of time and location. You need adequate capital. You need the ability to manage and multitask. You need to have education and experience in the field. A strong work ethic, effective time management, and a willingness to ask for input from others. You need to know your options in trying to decide on what type of business, how you should start a business. Let's start with that. There are different ways to start a business. First, you can start a business from scratch. If you start a business from scratch, the advantages are that you have nothing that's tampering you by previous images or technologies. You can choose your location, your name, your logo, your relationships, etc. You can explore new markets and directions. And you can see your dreams come true. The disadvantages, of course, are that you have no base. You must build everything from scratch. It's a greater risk because you don't know how successful it's going to be. There's no track record. It's difficult to get financing. Most banks won't provide any financing to anybody that's not in business for at least 2 years. And you have to see your dreams, you could see your dreams become a nightmare. That's if you're looking to do it from scratch. You also could be buying a business. So you could enter into the business by buying an established business and having an established clientele, suppliers, and location. You will have a known quantity, a proven formula and name. You will have help in starting and running the business, hopefully by the former owner. You can review the records of the former owner to see how successful it had been in the past and what you can expect. And it's easier to obtain financing because you have some financial records from the business that's been in existence that you could show to banks, etc. The disadvantages that you're going to have is there's potential hidden issues. There could be debts, there could be a poor reputation. The customers could be loyal to the owner and may not come to stay with you. You may have out-of-date inventory or transfer issues that will come into play. And that there's no guarantee that the success of the business that you're purchasing will continue. Another way to get into business is by buying a franchise. The advantages of buying a franchise is that you have a proven image and product and service. You have marketing and sales power. You have limited experience because the franchisor could help train you. You wind up having continued consulting relationships with the franchisor and with other franchisees. The disadvantages are that you lose some control. You're not always your own boss. The franchisor decides that they're going to do something across the board for all of them. You need to do the same thing in order to keep the franchise. With the franchise, you're going to have to pay some royalty fees and other types of fees. You may have to buy from the franchisor. So some of the expenses and supplies could be controlled. There's operational boundaries and limited choices. Your franchise usually would be within a certain area, and you need to stay within that area. You have binding contracts that you need to sign, and the franchisor's problems are your problems. So if there's something that goes wrong, for example, with McDonald's, you're going to face the same problems. By the way, if you don't know that the largest franchisor is Subway. And Subway winds up having problems with the boundaries. A lot of people wind up opening up a franchise and the boundaries will cross. But in getting into buying a franchise, there are people that could help you to decide on what franchise you would want to buy. And the help that you would get from the people that will help you is paid for by the franchisor. So there's no cost to you to get the assistance in order to decide on what franchise might be helpful for you to own. You also have a home-based business that you could have. The convenience is that you'd be, convenient to work location because you're working at home. It's less expensive. You got flexible schedule, and there's tax advantages because you could deduct some of your home expenses in your tax return. The disadvantages are that zoning or deed restrictions may exist in what could go into your home. You're isolated from others. All you're going to have is the four walls. And if you think that you need to meet with people or deal with people without getting out, you may find that working at home is not the type of business you want. You have difficult financing. There's family distractions, and you have good old Uncle Sam trying to do scrutiny to make sure that you're legitimately running it out of your home. We then wind up having not-for-profit organizations. Now, not-for-profit organizations or nonprofit, that doesn't mean they don't make money. It means that the money is not yours. It winds up staying in the business. It allows operations in a not-for-profit status. Yeah, there are no owners. Many qualify for government or foundation grants. Get protection from liability for directors and employees. You can pay salaries to employees and consulting fees for contractors. The disadvantages are that most of the not-for-profits need to focus on education or charitable purposes, and you cannot profit from those who created the organization. All profits, as I said, remain in the organization, and you must apply and qualify for 501c3 status or sales tax exemptions. The last way that you have is online business. The advantages here are lower startup costs, expanded geographic reach, convenience and accessibility, and flexibility. The disadvantages are you have low conversion rate, low barriers to enter, and higher compensation and competition. Visitor expectations and no personal contact. The online businesses, there are basically three types that you're going to be dealing with. One is an advertising-based type, where you have to attract the visitors and sell advertising to the competition. This is like a Yahoo type business. Another one is a retail-based. This is what most of them are, where it's an online storefront. Here again, the online storefront is similar to an Amazon. And the third type of online business is a forum-based, which provides a place to buy and sell. This is the type that, like an eBay, where you could place things, that you have people placing things for sale and others buying, and you get a fee or commission out of it in fee or a commission. Now, let me spend a few minutes going over the entrepreneur characteristics, what you need to have in order to succeed. First of all, you need to be a self-starter. You need to be resourceful, responsible. You need to be organized. You need to be a hard worker, persistent. You need to be decisive, healthy. And this last one may not sound big, but it's the biggest of them all. You need to have a supportive family. Here are the many hats you're going to have to wear. You're going to be the CEO, you're going to be the administrator, you're going to take care of accounting, human resources, marketing, sales, customer service, product and fulfillment, technology, facilities, you name it, you're it. Doesn't show on here. Well, it does, facilities, you have to clean the place. Now, let me talk about how you're going to handle some of these things. One of this that you're going to have. You have marketing, for example. In marketing, you have you have to come up with the strategy you're going to use to create a desired purchase. You need to create your own company image. Anything you do to get and keep a customer, you have to do. And your product or service will not sell itself. Marketing is essential to bringing in your customers. Sales. You have customer contact work. You have to be finding prospects. You need to be making presentations. You need to be preparing bids, closing deals, processing orders. You need to focus on selling. Now, selling focuses on the needs of the seller. Marketing focuses on the needs of the customer, the buyer. Most entrepreneurs resist selling. They say that they're not good at it. They've never done it. I beg to differ. I think that you wind up selling probably every day of the year. You're trying to sell your wife on something, or your children on something, or your boss on something. So you're doing it without really knowing about it. In fact, I'm kind of doing it right now, trying to sell you on SCORE. The products and or services that you would have. you need to know who needs it. Why do they need it? How is it different or better than the competition? You need to, with that, when you decide on what you're going to be trying to, what business you're going to be in and doing, you need to define the offering, the functionality and the packaging, the quality, again, the different differentiation of you from your competition. And then you have your positioning. Location, location, location. Remember the differences here from what we mentioned earlier is whether you're buying a business, buying into a business, or starting from scratch. If you are buying a franchise, you usually wind up having help from the franchisor in deciding on where you're going to open up. If you're buying a business that exists, then you already know the location and how it's been successful or not. You have a niche that you're trying to get into. Do you have a niche? A target market. You need to decide on what that target market is going to be. What competition is there in that marketplace? How are you going to distribute your product and merchandising? And this is true whether you have a product or whether you have a service. For example, just as I'm doing now, SCORE provides a service. How do we distribute that service? We're doing it by email, by phone, by Zoom. We at one time would have people come in to meet with us. So whether it's a service or a product, you need to develop this mechanism so that you know how to perform. And these are things that you will wind up putting into a business plan that we'll speak a little more about later. You have branding. You need to consider getting your name out there, the name recognition. What are the qualifications of a product or service? Market identity, advertising. When we talk about Coca-Cola, a Coke, there's no doubt about it when you see the logo of Coke. Working on your branding is coming up with a logo that would be helpful to you because you want to use that wherever you are in all of your advertising, marketing, stationery, business cards, and the like. And it's important because you want to know, you have to decide on what you want to be known for. For example, do you want to be known as being high quality? Do you want to be known as the cheapest in the marketplace? Do you want to be known for prompt service? All of this is the reputation you need to build and you want people to know about. You have here the issue of pricing comes up most of the time. And here again, in talking about pricing, you want to know what the consumer's reaction is. You want to know what your costs are in trying to put your product out there. What is your competition charging? How do you compare to your competition? You don't want to have a price war. That doesn't help. And again, you don't want to have your product so cheap that they don't think it has value. And you don't want to have it so high that they have higher expectations than you could actually give them. You have to decide on the credit terms and any discounts that you might want to provide. You're going to have to decide on how you're going to collect things, money, credit cards, and cash, and accounting systems to help you with what you need. When you're looking at your competition, you should look at least 3 competitors. And everyone says, not everyone, but many people say when they come to visit me, they say, there's no competition. I don't have any competitors. You'd be surprised at how many people are competitors. Even if you think about the grocery business, you go to a pharmacy and then you have all the groceries. So you'd be surprised as to how many people could be your competitors. You have to think about the size of the operation you're going to have and the number of employees you're going to have. The price and the quality of the products you're going to serve, the services provided, reputation, again, the strengths and weaknesses of your competitors. A personal visit is beneficial, an observation of how the competitor works. You should find out who their suppliers and contractors are, because you may wind up being able to use the same ones to help you through things. And you want to look at other businesses in the area to see how they're functioning and how they fit within the community and how you might be able to fit within the community. The next thing you have to do is make this whole thing legal. Let me just go through some of the different types of organizations forms that exist. You have the sole proprietorship. This is the simplest of them all. This is just you. You wind up going to the county clerk's office, fill out a form that you're doing business as, whatever name you're going to use, pay him a fee, and you're in business. The second is a partnership. Well, the partnership is nothing more than several sole proprietors that have gotten together. But one of the things that's important is that you need to put together an agreement as to how you're going to perform. What happens if something happens to one of the partners? How do you get out of the business? Basically, it comes down to putting together a buy-sell agreement, they would call it. And what you would also wind up having with the partnership and with the sole proprietorship is probably getting some key man insurance to help you, because if the death of one of those people could affect your business tremendously. In fact, in a sole proprietorship, if you pass away, the business passes away because there is nothing there. You wind up having, in both the sole proprietorship and in the partnership, there are liabilities that you would have that you want to protect yourself against. So you would buy specific insurance to help you with that. When it comes to protecting all of your assets, this is where the limited liability company comes into play, and the C corporation and the S corporation. These corporate structures wind up giving you limited liability protection in that fashion. But there are some caveats that you need to consider. For example, in a limited liability company, you wind up having a managing partner or a managing director, and you could have any number of other members, and they don't all have to be equal. The profits don't have to be shared equally. All that winds up being done in an agreement that has to be put together. It is similar to a partnership in the sense that each person in the liability company has a say. You wind up going down to a C corporation. A C corporation is one in which the stock of the company can be easily traded. These are far from being for small businesses. This is your bigger corporations that you are usually buying in the stock exchange of some type. The S Corp is one where you wind up having protection because of the liability. Your personal assets are not part of the corporation. You wind up being taxed as an individual, which is the same as a sole proprietorship or a partnership. You're taxed as an individual. The partners in a sub S corporation, you can have partners. The partners all own a percentage based on their investment. So if some person puts in 50%, they'll own 50%, and the other could be 20 or 10, however it is, and the profits are shared accordingly. In a limited liability company, the profits do not have to be shared based on the percentage of ownership. You could have one person owning 2% and getting 10% of the profits. The limited liability company is much more expensive to get started, but winds up being cheaper to control and to go along. The sub S corporation winds up being relatively cheap to start, but winds up being a little more expensive in taxation because you wind up paying franchise taxes to the state and city that you wouldn't have with the limited liability company. The recommendation that I usually have is to keep it simple. Either take on a sole proprietorship or partnership. And if the liability and/or taxation is a concern, then take on the LLC or a subchapter S corporation. Now, you need to consider insurance. There are so many different things that could happen. You have to think of a property insurance. This is for your fire and theft, etc. Liability insurance in case somebody slips and falls. A motor vehicle. Umbrella limitation, which is a policy that puts a higher level over all of your policies. It's called an umbrella because it raises the limit on your property, your liability, motor vehicle above the basics. You got workman's compensation, you got health insurance, you got life insurance, and you got business interruption insurance. All of these are things that you need to consider. One of the people that you will have in your corner is to have some insurance agent that could help guide you through all of those steps. And if you decided you wanted to get a little further information about it from SCORE, we'd be glad to sit down with you and guide you to some insurance agents that could help you. Yeah, good old Uncle Sam and other government agencies that have regulations out there. You wind up having business licenses and approvals. You have labor laws. You got all the handicap rules and regulations that come into play. Immigration laws. You got IRS and Social Security withholding and payments that have to come into play. Here again, we could sit down with you at SCORE and try to go through the different ones that would apply to the specific business that you're dealing with. These are the most important people you're going to have to get in as your at first employees, whether it's part-time or whichever way you call it. I call it employees. You need to have a banker in your corner. You need to have a lawyer, an accountant, an insurance agent, and a business mentor. Developing a relationship with these five people can be, meeting them once a year or meeting them every day. But these are people you need to find to work with this, and the sooner you get these people in line with what you're trying to do, the better it's going to be for you. And let's talk a little bit about funding and cash management. Okay. You shouldn't jump into a business unless you have some type of reserves. You should know what your total monthly cost of living is. You need to know areas where you can cut back so that you could manage. You have to know what your outstanding debt is, the amount that you have in savings, and you should have a total amount needed of about 6 to 12 months of expense, enough to cover 6 to 12 months of expenses. Because when you start out in your business, you're going to have a lot of things, initial costs that you have to come up with and pay, and you're not going to start making a profit on day one. So you need to have some reserves to help carry you through. These are some startup cash needs that you're going to have to consider. You have tools and equipment to get started, a computer, adding machine, counters, pens, pencils, all kinds of things. Depending on the business that you're in, if it's a laundry, you have all kinds of leasehold improvements to put in, washing machines, dryers, etc. Restaurant, needless to say, you go into a restaurant, everything you see there is a leasehold improvement that's been put in. Licenses and permits that you have to pay for. Professional fees. I mentioned before the lawyer and the accountant. They're going to ask for a fee of some type to help you. Usually they'll give you, any one of them will usually give you an hour or so free to talk about what you're trying to do, to see if you are compatible, that you can get along with each other, that they understand each other. But after that, they're probably going to say, you owe me some money. And you have initial inventory that you have to put together. Now, service businesses don't have a lot of these things, but depending on the business that you have, your startup cash needs will vary. Besides the startup costs that you have to consider, you're going to have your operating costs when the business is actually moving. You're going to need salaries, even for yourself, rent, insurance, taxes and fees, advertising, loan interest principal, utilities, maintenance costs. Now, where do you get the money to pay for all of this stuff? You wind up getting equity, which signifies ownership. These are your personal savings. You get family and friends that could help. You got partner contributions. This is why people form partnerships sometimes, or besides the need to bring in expertise from more than one. And you have profits that you retain in the business. Besides equity, there's also debt that you could have. And this is where you could get a loan from a bank or a credit union or other type of financial institutions that exist. You got a Community Express microloan. These are banks that will help you with loans, usually no more than $25,000 to $50,000 in amount, but they're geared to help startup businesses more than the major banks that exist. And then you have credit cards. It's not what we recommend, but you can use credit cards as a way of getting some debt. I do caution you, though, that if you wind up dealing with relatives and you're getting money from them, family and friends, have an agreement with them as to when and how you're going to pay them back, and put it in writing so that there isn't an argument later on as to you said, I said, whatever. Now, when you do go for a loan, what does a lender look for? The lender looks for your character and your commitment to the business. They're going to do a credit check, do a credit rating on you. They're going to look at your cash flow. They want to know that you have enough money to pay them back from the business or whatever. They want to see what collateral you have, because they're going to take collateral. They want to know that you have industry knowledge. And if you don't have the industry knowledge, that in starting your business, you have somebody in the business with the knowledge that could give you the advice and guidance. They want to know your personal investment. How much are you putting into the business? If you're not putting money into it, they don't want to know you, because if you're not willing to put your money up, why should they? They're going to look at the financial history. They're going to look at your financial history plus the financial history of the business. If it's not a new business, they'll have financial statements to look at from the one that you're buying, or if you're buying a franchise, they'll look at some history of what other franchisees have experienced. They want to know your financial projections. What projections have you got? They'd like at least 1 year, maybe 2 years. And here again, you need to be realistic in your projections. You can't, if you show you're going to show a loss in the first year, that's not so terrible. But you have to try to come up with when you expect your break even will happen. They want to know what your management skills are. If you've never had any management, you've never managed any people, haven't been a supervisor or anything of that nature, that doesn't mean you can't run your business. But they will take all of that into consideration in deciding whether they're going to lend you money or not lend you money. And they're going to take a look at who your competitors are. If you haven't looked at your competitors, they will. Because they want to say, you know, how are you going to compete with the so-and-so who's right next door to you or across the street or three stores down? So when they're asking you for this information, they're actually forcing you to do some of the things that you need to put into a business plan. All right. Cash is your most important asset. You should open up a separate bank account for your business. Don't commingle your money, personal money, with your business money. Deposit all the receipts intact. Use a petty cash fund if you need to. Separate your sales tax receipts on your books so that you're not commingling the sales receipts with your other receipts. And when you have to pay your sales taxes, the money's there to pay. You hang on to cash as long as possible. Reconcile your bank account monthly. You may wind up doing it even more frequently these days because of all the fraud that's taken place. You want to make sure that things aren't happening into your account, both your personal account as well as your business account. You have adequate cash and a reserve fund at the start of the business. This is where I mentioned the amount that you might want to have before you step into the business. And if you don't have enough, you may want to enter your business slowly, part-time. Prepare and maintain a cash forecast for at least 6 months into the future. Okay, now I have a self-assessment to determine if you're ready to get into business. You'll get this when you get the handouts, when you get the material sent to you. And here again, there's 10 questions here. Each one is 1 point. Like the first one here says, my product or service is servicing an unmet need. Yes or no? The next would be, my product or service could be expanded to gain additional customer groups. Yes or no? And the total you're going to get out of this is, the maximum you can get is 10 points. If you don't have at least 1 point for each of these questions, that's something that you need to spend some time on. Get someone to help you. Again, it's an assessment of when you're ready to get into business. Now, you probably will not be ready to get into business after my talk to you today. In fact, after my talk today, you may decide, I don't belong in business. My intention is not to frighten you, not to scare you off, not to tell you that. My intent is to tell you it is not easy. If you're determined, you will make it. If you're determined, there are people there to help you, and there are SCORE mentors out there that could help you. A business plan basics. The business plan is important. The business plan basically is your roadmap to tell you where you're going to go and how you're going to get there. When you put together a business plan, I usually try to do it in pencil. If we look at that booklet that I mentioned before of all the five subjects that we cover, you could fill out sections in that booklet, and those sections will help you to come up with a business plan when you're finished going through it all. And the reason I say that is, as you're trying to figure out how you're doing things in your business plan, you may decide, no, my idea to do it as a partnership doesn't work, or my idea of marketing with the newspaper isn't beneficial for what I'm trying to do. So your business plan becomes, again, your roadmap. It is the most important part of this. And it does not have to be something that is put into a book and it's 20 to 30 pages long. But it should contain, table of contents and an executive summary. And section 1 should be, what is the business? What is the business about? Section 2 is going to be your financial forecasts. And section 3 is going to be your supporting data that you're going to need. This is really a basic, but there's more in the additional chapters that I had mentioned earlier called Simple Steps for Starting Your Business. It's at the bottom of each of these slides. Simple steps for starting your business. Now what? Okay. You need to be well prepared, and you can sign up for Simple Steps for Starting Your Business series. You can contact a mentor. The list of mentors and the emails are going to be in the material that you're going to be receiving. Have them help you, help them be a guide to you, help them to work with you. Defer your decision about getting into business until you've worked on your dream a little, until you've put down on paper some of the steps that you're going to take, until you've already put together a business plan and see after you're putting that business plan together if it still makes sense for you to do. All right. And if you're already in business, you still could use a business plan. Update it. Make sure that where you're going to go to grow your business is still something that you could handle and want to handle.
Great, thank you, John.
These are the five sections of the simple steps. Now, I think we have some questions. Maybe you want to have me answer. Let's see what happens.
Okay. First question, John, does a sole proprietor need insurance? I don't have office space.
Does a sole proprietor have to bunch?
Does a sole proprietor need insurance? I don't have office space.
Yeah, the sole proprietor should have insurance. If you're going to be working out of someplace, whether it's your home or wherever, and you should have some liability insurance for that. You may want to have some insurance to cover you if for some reason your business is interrupted. You may want to have some insurance to protect you in case you become ill and you can't operate. So there are different types of insurance that would be beneficial for you as a sole proprietor.
Okay, thank you. Next one, John. I have a business account. Is all the money after expenses mine?
After your expenses, then Uncle Sam gets a hold of you.
There you go. Okay. I think that was it. Yep, that's it for all the questions we have at the moment, John.
Okay.
I want to thank you
there's
for-
an adage that goes, I can't be out of money because I still have checks. So manage your funds. I would be very happy to help anyone who's interested, as would any of the other SCORE mentors. So don't be afraid, we don't bite.
Yeah. So I just want to remind everybody, again, there's a complete list of all the chapters sponsoring this webinar with their contact information. Please feel free to reach out to them to either schedule mentoring sessions or to request your copy of Simple Steps for Starting Your Business workbook that John has been referring to. Again, we appreciate your time and joining us this afternoon. And let me just, we've got one last couple of real quick ones. After filing for articles of organization through departments, that do you have to do the same for each country you plan to do business in? I think the answer to that would be yes, right?
Well, no, the articles of organization are not necessarily for each county that you plan to do business in. Usually it's by state.
That's true.
And if you cross state lines, there's issues that come up with taxation, sales tax, and regulations of each of the states. So usually it's state bound, not state guided, not county or city guided.
Right. Okay, and one last question. I am working on my startup venture and my mentor is concerned that my target audience ability to afford the service, This is a reason to not go forward through my online business?
Well, no, if the mentor feels that the target audience doesn't have the ability to afford the service, the question is, can the service be modified in some way? Or realizing that your target market may be very limited because of the ability of some of those people to pay for your service. So you should, this is why when you're putting your business plan together, you should put these pieces in and then try to go through the whole thing to see, does it really make sense? Are there enough customers out there to make me whole?
Plus also testing to see what is your competition offering in terms of service and what their pricing structure is. And one area I encourage all clients to take a look at. You don't want to be overpriced in the market. You certainly don't want to be underpriced, but if you can justify the premium, okay, go for it. Okay, one last comment is a thank you. Was a job well done. I echo those sentiments. Thank you, John.
Thank you all. It was a pleasure being with you.
Okay, thank you, everybody. Have a great day. Take care.